Welcome to the channel. Today we're cutting through the noise and showing you how to hire a financial advisor for pure advice, not a sales pitch. If you manage your own investments but want expert validation, this is for you. We'll focus on why fee-only fiduciaries matter, how to find them, what to expect to pay, and the exact steps to hire one for a one-time strategy review. Now, let's begin by previewing our roadmap for the video. Here's today's agenda. First, we define the core problem in wealth management. Next, we contrast fee-only versus fee-based. Then we clarify what fiduciary duty really means. After that, we walk through a 5-step hiring process. We'll cover expected fees, red flags to avoid, test your knowledge with quick quizzes, and then work through a short case study. We'll also include a brief disclaimer, and finally, wrap up with key takeaways and next steps. With that laid out, let's move into why this topic matters so much. As you approach retirement, the stakes rise. You need clarity, confidence, and a plan that aligns with your goals. The last thing you need is pressure to transfer assets or buy complex products. This video equips you to secure impartial advice from a fee-only fiduciary whose only revenue comes from planning, not product sales or asset-based fees. Now that we've set the urgency, let's define the core problem we're solving. The uncomfortable reality is that many so-called advisors are primarily salespeople. When compensation is tied to selling products like annuities or insurance, or to gathering assets under management, recommendations can become conflicted. If you're a do-it-yourself investor, you likely want validation and strategic input, not pressure to move your accounts. The right solution is a fee-only fiduciary who can deliver a one-time, project-based plan so you keep control. With the problem clear, let's compare fee-only and fee-based so you can avoid the trap. On the left is fee-only. These advisors do not receive commissions. They typically charge hourly rates or flat project fees, which aligns their incentives with your need for objective advice. On the right is fee-based, a confusing label that still permits commissions from product sales. That creates conflicts, especially when it comes to annuities and insurance. For a DIY investor seeking a one-time strategy review, fee-only is the safer path. Now that the distinction is clear, let's spell out what fiduciary duty requires. Fiduciary duty means the advisor must act in your best interest at all times. It requires transparency about conflicts, compensation, and total costs. In practice, it means advice is not tied to selling a product or gathering your assets. This framework is ideal for self-directed investors who want a second opinion and a cohesive plan without giving up control. With that foundation, let's move into a practical, step-by-step hiring process you can follow. Here's a simple process. First, clarify what you need: a retirement strategy, tax planning, allocation review, and Roth conversion analysis. Second, search official financial planning board directories and apply filters for fee-only fiduciaries who offer hourly or project-based work. Third, verify compensation, no commissions and no requirement to transfer assets. Review their Form ADV for disclosures. Fourth, interview them. Ask about process, deliverables, timeline, and all-in price. Finally, engage for a one-time plan. You keep your accounts and implement the recommendations yourself. Next, let's talk about what you should expect to pay. For a comprehensive one-time plan, expect a total fee in the $3,000 to $4,000 range, depending on scope and complexity. This often includes discovery, data cleanup, asset allocation review, tax analysis, Roth conversion modeling, retirement income and withdrawal strategy, and a written plan with a review meeting. Rates and hours vary by professional and geography, but this range is typical for a thorough engagement. Now that you know the costs, let's visualize your search strategy with a quick mind map. This mind map outlines the entire search strategy. Start at the center with finding a fee-only fiduciary for a project-based engagement. One branch shows official directories such as the CFP Board, NAPFA, and XY Planning Network, with filters for fee-only and hourly or project-based services. Another branch lists filters like fiduciary status, no commissions, no requirement to transfer assets, remote availability, and experience with do-it-yourself investors. A verification branch emphasizes reviewing Form ADV, confirming compensation, identifying any conflicts, and checking sample deliverables. The interview branch prompts questions on scope, fixed price, timeline, communication style, and assessing whether you are dealing with a planner or a salesperson. The deliverables branch includes the written plan, tax analysis, allocation guidance, Roth conversion roadmap, and an action checklist. Finally, implementation remains with you, with optional check-ins.
With the search strategy mapped, let's highlight the red flags to avoid.
Here are the major red flags. First, the term fee-based is not the same as fee-only. Fee-based may still include commissions. Second, be wary of pressure to transfer your assets for ongoing management. Third, avoid default product pushes, such as annuities or permanent life insurance, especially when they are presented as a one-size-fits-all solution. Fourth, insist on clear, written compensation disclosures.
Fifth, if deliverables are vague or no sample plan is available, that is a concern. In contrast, seek a written statement confirming fee-only fiduciary status with no commissions, a fixed or hourly project quote with an all-in price, a clear deliverables list and timeline, your retention of account custody, and the option for check-ins rather than a mandatory asset-based arrangement. To reinforce these ideas, let's test your knowledge with a quick quiz. Question: which designation ensures the advisor's only revenue is their expertise, not product sales or a cut of your assets? Options: a fee-based advisor, B. Fee-Only Fiduciary, C. Commission-Only Broker, D. Robo-Advisor. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Fee-Only Fiduciary. This compensation model removes commissions and avoids asset-based incentives. It aligns advisor revenue with the advice you receive rather than with product sales or custody of your assets. Now that we have that clarified, let's do one more quick check. Question: what is a typical total cost for a comprehensive one-time retirement strategy plan from a fee-only planner? Options: A. $300 to $600, B. $1,000 to $1,500, C. $3,000 to $4,000, D. $8,000 to $10,000. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is C. $3,000 to $4,000. This band typically covers a comprehensive project: discovery, asset allocation review, tax planning, Roth conversion analysis, a retirement income plan, and a written set of recommendations. Next, let's look at a short case study to see how this plays out in practice. In this case study, the investor uses an official directory to filter for fee-only, fiduciary, hourly, or project-based advisors. The directory returns a shortlist. The investor schedules an introductory call with an advisor to discuss scope, fees, and deliverables. The advisor sends a written proposal with a fixed project fee. The investor provides data, such as accounts, income, and goals. The advisor analyzes taxes, allocation, and Roth conversion opportunities, then delivers a written plan and action checklist. The investor implements the recommendations independently and can schedule an optional check-in later. Before we close, a brief disclaimer.
This video is for educational purposes only and does not constitute personalized financial, tax, or legal advice. Your situation is unique, so consult a qualified professional before implementing any strategy. With that in mind, let's consolidate the key takeaways. These are the key points. First, focus exclusively on fee-only fiduciaries to reduce conflicts. Second, select hourly or flat project fees to keep advice independent from product sales or asset-based incentives. Third, expect to pay $3,000 to $4,000 for a comprehensive one-time plan.
Fourth, use official directories and filters to locate qualified professionals. Fifth, maintain custody and control of your accounts while you implement the plan. To conclude, let's wrap up with clear next steps.
To move forward, clarify your goals and the scope of work you want. Use official directories and apply filters to locate fee-only fiduciaries. Verify compensation details and review Form ADV to confirm there are no commissions.
Interview advisors about process, deliverables, timeline, and fixed project fees.
Engage for a one-time plan and implement the steps confidently.
Finally, let's close with a quick call to action.
Thank you for watching. If this video helped you understand how to hire for pure advice, please like the video, share it with a friend who is nearing retirement, and subscribe for more smart, conflict-free planning content. In the comments, tell us your biggest question about hiring a fee-only fiduciary or your experience with project-based planning. Your insights help others make better decisions.